Good morning, everyone. Good to see you. Let me get switched over here. I'll get switched over to my screen share as we prepare for market open. Give me a second. Got to get this brought up so I can see your comments. And there we go. Type in a little message. Everybody sees it. Okay. See, a couple of you are already in here. We have about 4.5 minutes until market open. We can see what price has done overnight. Okay, there's the start of the session, but you can see we were already working our way up. If we come all the way back over here, okay, see this? Right there, we got a touch into a demand zone, bounced up to the 20, back down, kind of put in a double bottom right there. Then we started working our way up and creating structure, higher highs and higher lows. Okay, as you see this, there was the start of the overnight session right there. So I'll give everybody just a couple more minutes, and then we'll get started. Good morning, Grayson. Let's see if we get a few more people. Normally, just about everybody in the premium room is on, so we'll give them a few minutes. Price action's been very, very predictable these last couple of days, which has made it nice. I mean, I guess I would say price action is pretty much always predictable. It's just reading the information that the market's giving to you. See, we just had somebody else join us right there. Good morning. We got about 2.5 minutes before the market opens for regular trading hours. So we have a couple of you here right now. Give me 1 second, guys. I'll be right back. Okay, sorry about that. Just had to step out for a second. So, as I was saying, for the last couple of days, price action's been very predictable, coming up into supply. Now here, we broke right through a supply zone, right there. And up here, we got the nice bounce back, right to opening price level, structure, down, created demand, right up in to supply, back down to the freshly created demand. And as you can see, we're still going higher right now. This was the trade idea that I gave in the premium room this morning, right there. Okay, and I said with a tight stop, you see price came back, never triggered. My alert here is where I would have had a stop set and it never triggered. It got close, but never triggered, and then it's been moving up just like I thought it would, right out of demand, which was freshly created overnight. You got about less than a minute. Okay, so right about here, it was this candle. So that was at 12:30, the 12:30 candle. It was between 12:30 and 1 a.m. that the announcement came out that a deal had been reached for the stimulus package. And as you can see, price then just started going up. Okay, but we know that it should, if this is fresh, which we know it was. Let me see if I can go all the way back to the origin or not without going to a higher time frame. I might have to go to a higher time frame. Nope, it's right there. Okay. Okay, so there's the origin on a strong rally base drop, which creates the strongest levels of supply and demand. And what did we do? Came right up into it, and we sold off. Okay, so let's squeeze back in. There's the opening bell. So now we got to get rid of this price level, and we're going to create a new one. All right, so price opened at 24.44. 24.44. I need to get a different tool. So we're going to create our new opening price level. See, price is initially selling off. Nothing abnormal about that, right? Because everybody's expecting it to go up. So now we're going to, whoops, I didn't change that. Now we'll watch and see. Obviously, we're not even a couple minutes in yet. We'll watch and see if that's a fake out by big money. How many times do we see the initial move, right, just be sort of a fake out? And I hate to use that word, but typically, right, most mornings, the initial move, whatever direction it goes to start, then it reverses and goes the other way, right? Because they're trying to get rid of retail traders in the direction that they really want to take it. See, somebody else just joined us. So we're watching market open here. So that's opening price level right there. We flush down. We're coming back up right now. We'll see. Again, we're going to see if this is the direction they really want to take it, or if they're just trying to get retail traders out of the way. And there's somebody else, so we're getting some more people joining us. As we were saying before, several of you were on. Okay, last night, this big candle here was when they made the announcement that they had reached a tentative deal on the stimulus package. See, price just steadily went up until we hit the supply zone. This is a first test. We know it's fresh. We just went back and looked at it. Excuse me. I had an alert go off on a stock I was looking at the other day. It's not something I'm in or playing right now. Okay, and then we got this big sell-off right out of supply. Okay, now if you're up 5:30 in the morning, right? I'm usually waking up right around then or just after, but if you're up at this time and it starts to reject, you maybe go short right here under supply, and look at that. In basically 1 hour, right, because this would have already been occurring, in basically 1 hour it dropped, let's see, from 76 down to 2403, $73. In 1 hour from just here to here was $73. Okay, so if somebody's awake, you could go short right underneath the supply zone, put your stop up around here, and there we go. We're starting to go. See it? Just triggered my alert. My alert was T1, so the trade alert I gave in the premium room this morning, T1 has been hit right there. Okay, so it's already been hit. Good morning, Al. Good to see you. Okay, then my T2 was up here. Okay, so if we clear this, we should see even more momentum. And then my T2 was up here. So they were kind of far apart this morning, but if we really start to get some momentum, it shouldn't be that hard to get up here. I know that's a big distance, right? Okay, so I said enter here, which was, let's just say 2417. Well, I can tell you exactly. Yeah, 2417. Target 1 was the top of this candle where it closed, which was 2402. I'm sorry. 2454. 2454. All right, so already T1 54 minus 17 is how much? Like what, 37? Is that right? Let's see here. 54 minus 17. Yeah, $37 move already. Okay, from where I told you you could enter right there. And then if it gets all the way up here, that's 24.87, then that would be a $70 move. Okay, and you see how once it's cleared here, you see how it's accelerating now? So we'll watch this play out just for a minute or so, and then we'll start looking at other names. Awesome. Sonny, I don't know if you're in the room. Sonny just posted that he went ahead and took profit at $40. So he took my trade this morning and he closed it when he was up $40, meaning $40 of movement. Awesome. Let me, in case he's not in here, let me just respond to him real quick, because that's, yeah, he says he's going to join us later. So let me just respond to him, because that's what this is all about. Right? That's what this is all about, is making those types of trades, right? Okay, so let me get back so I can see your comments. There we go. Okay, so as we can see, still going. Just what I said, right? I told everybody this morning. I know Sonny was really interested in it. He obviously took it. Okay, I said if we clear this, this was the next obstacle, this wick, right? And we went up to it twice on this same candle. Okay, those of you who were watching, who were paying attention at that time, you noticed I said that, right? I said it in the room. We went up here twice and rejected both times. Came all the way back down to about right here both times. Then on the next candle, we went up and we broke it. That gave us the momentum to go up. The 20 I wasn't as concerned about this time, and I'll tell you why. Look over here and look right here. All right, now over here it was being respected, but it wasn't last night. Okay, went right through it, and then this morning came right back through it. So I kind of figured if we could just get over this wick, it was going to be pretty easy to get up here, which we already did. And then if we got over there, I kind of assumed that price then would accelerate, which it has. And we'd have a good chance of getting at least up to here, maybe higher, right? But that's why this was T1, okay? The top right here, not the wick, the top right here. Okay, that was $37 from there. Now, Sonny said he closed out at 40, which would have been probably right about the top of this wick. And then T2, I put quite a distance away up here at this resistance level, only because if you look, there's really nothing there to stop price. Okay, the only thing that stops price at this point is if a bunch of institutional money comes in and tries to turn it lower, which they can, right? They can do that. But barring something like that, price should get up here. In fact, I don't think I have an alert, so let me set an alert. 2487.75 right there. There we go. Okay, now I have the alert set right on the level, but I would typically exit just before it, because you don't want to see a bounce, right? Have that a penny off for some reason. There we go. Okay, so I would typically see about where my cursor is. Okay, if I was in that trade, right about there is where I would exit, only because you don't want it to hit this and then all of a sudden take a big bounce back down. And it could, right? It could hit this and maybe even bounce down 15, 20 bucks and then go higher. but you just don't want that to go against you. All right, so price is still accelerating to the upside. Okay, so we got 6 of you on here. So obviously a couple more just joined us. Welcome. We're just watching, and again, you guys all know, right here's where I called it this morning. Okay, and all we're looking at here is very high probability. We came out of supply, back down into fresh demand, okay, which was created this morning, and we got a hammer, right? So we're starting to put a bunch of factors together, okay? We got this big drop. Here's our base, these 2 candles here, hammer, actually a 3rd candle, because it took it a couple times to get over this wick. So strong drop, base, and we're rallying out of demand. This has already been tested. Now, can it turn around right here again? Absolutely, it can. It's just not as reliable the 2nd time or the 3rd time. Okay, so you see we've really got to where I said I would take profit. You see that? Okay, that's where I would exit with T2 right there. Now I have the alert all the way up here at the level, but that's why I say I always like to exit just a little bit early, right? Because you just don't want to see a bounce go against you. We're just going to watch this another minute or 2, and then we'll start looking at some other things. But I want you guys to get used to just seeing how reliable, okay, price action is, the moves are, the probabilities, especially when you start to stack things in your favor. Okay, so here we had really a couple of powerful things in our favor, right? We had fresh demand. We had a strong drop into it. We know, and I want you guys to understand this. This is psychology, right? What happens with most retail traders as this is happening? Okay, what happens? They get euphoric if they're going short, right? If they're going short, and they start jumping in down here, okay? Because they're not trading supply and demand. Not like we do, right? So they saw price turn around, they see this candle, and then they start saying, hey, if we go red again, I'm going to get in. So they start chasing. I always tell you guys, don't chase. The reason you don't chase is this, right? So a lot of retail guys, they start jumping in down here because they're thinking, well, look at this, man. We're falling. This is going to just go right on down. And then we hit demand. And then we get a hammer, right? And we base, and then we blast right out of demand, right? It's just highly probable. It happens over and over again, just like last night. All right, now not many retail traders are up in the middle of the night. Okay, there's a few, right? But look, here's where we got the news. Price just went up and up and up and up and up until we got into supply, and then we sold off. So there's nothing to be stressed about. There's nothing to be, some people see this, and again, they just get either excited or they panic. Now, panic is also what leads to this, right? So on the way up, we know there's stops being placed under each one of these wicks, right? And look, we got our nice diagonal pattern that we talk about. This goes back to candlesticks, okay? So we know when we have this nice diagonal pattern with wicks below, now this one's a little bit bigger than you like to see, but you like these, right? Small to medium-sized wicks. As we start taking those stops out, what does that do? It accelerates price. Now let's just say you have no wick here, then this, no wick, no wick, no wick, and then this. That's when we start talking about obstacles, right? That's when we start talking about obstacles. It becomes more difficult to get over this. But when we start taking this out and then this out, and it just starts accelerating down, and especially when you take that out. Now we know, without even watching it in real time, that what happened is it came down to the bottom of this wick, and then it bounced up here, right? Because it caught some support, and then it went lower. And once it took that out, That was all she wrote. Just straight flush right down into demand. Okay, now you guys see why I say get out just a little bit early? Look at the pullback. And what did I say? Probably 15 to 20 bucks. Let's look. All right, so about 85 down to 72, right? So that's about 13 bucks. I said 15 to 20. That's why you get out a little bit early. Now, it's still probably going to get back up here, and it may even go higher, but to me, why even risk it? You know, you just get out just a little bit early before your target, and then price can't bounce against you. Okay, so in my mind, both T1 and T2 have been taken out, right? I just have my alert set right at the level. But you guys know, you've been around me long enough. That's why this, right? This was here at the top of this candle and not the top of the wick. Just in case, even though it's a small wick, just in case you get up here and then you bounce, right? And Sonny did the right thing. You know, he felt very comfortable getting out with a $40 move. I mean, that's awesome, right? That is awesome. He caught a $40 move based on our trade alert. Okay, so we'll come back because we have this set, and let me do this. I'll set an alert right here at opening price level. That'll tell us if price starts to go the other direction. And now we can move on. And if there's anything in particular you guys want to look at, just let me know. I'm going to jump all around. Like I said this morning, we had a great mix. We had some names that were up, some names that were down, some that were flat. That's what you like to see when the market opens in terms of having a healthy market. You're still going to get your ramps, right? Because we were coming right out of demand. Okay? Doesn't really matter. We were going to do this no matter what. Just like we were going to sell off right there no matter what. Okay, so let's go to Tesla, because Tesla was up overnight. I'm not sure if there was any news that came out. Okay, but you can see gapped up big, right? Here's where we closed yesterday. Gapped up big, went up right to the 200, caught some resistance, and now it's selling back down. All right, that's Tesla. I'm not sure if they had news, but I know that like their gap up happened all throughout the night. Like right at after hours yesterday, it was already starting to go up. Another name that was going up after hours was BA. So let's go look and see what it's doing. Okay, here's BA. Look at that huge gap up. Huge. Gapped up to a nice area here where it had plenty of room to go either direction. It's sold off back to support so far. Okay, right here. Now we're going to see, is it going to hold and then start to go higher? Or is it going to break this, maybe break it, retest, and go lower, right? So we don't need to be in any hurry if this is a name that you want to trade or like to trade. Just start getting in the mindset of market open is almost like a reconnaissance mission, right? You're finding out the info that's going to help you take very high probability trades a little bit further into the session. Now, when I say further, that may be 15 minutes into the session, that may be a half hour in, an hour in, maybe it's later in the afternoon. Lately, I don't know if you guys have noticed this, lately between about 1:30 and 3 o'clock, it's been a great time to trade. There's been some really highly probable trades on equities between about 1:30 in the afternoon and 3 o'clock in the afternoon. So you just watch for those things to set up. So what I mean by that is I'm just going to make up a scenario here. Let's say price kind of went up and then it pulled back and then it was getting into maybe like say a support level, and this is around 1:30, 2 o'clock in the afternoon. Well then, okay, if it puts in a hammer, right? If it puts in a hammer or a doji or a spinning top as it receded into a level, and then it takes out the top of that, and that's, again, in those times of like 1:30 to 3 o'clock, that's a highly probable trade, because look at this. See how it finished the day yesterday? I'm just using that as an example. Okay, and we know that this was a gap at one time. So coming back down, I bet you if I went and looked, there's probably now a reason to put a level right here. But comes back down. That was at 2 o'clock. Imagine that. And then what did it do? Puts in a hammer. You take out the top of the hammer, and that's how you end the day. Highly probable trades. And I've been noticing that over these last couple of weeks in this volatility, that the first half of the day, as you can see here, maybe not the best to trade. I'm talking about equities right now. Okay, maybe not the best to trade, but then look at the second half. Look at the second half of the day, and this has been happening over and over again. You'll see like a drop like this, then it'll catch some support, it'll put in a hammer, you take out the hammer, and then let's just look and see what this move would have been just yesterday. All right, so the top of this hammer was 120.60. So at 120.61, and then, sorry about that, my phone started to ring. And then it went up to 127.96. Okay? So from 120.61 to 127.96, that's $7.30 in just a couple hours. That's what I'm talking about. So just being really patient and letting these things develop. The morning can be your reconnaissance, right? You're gathering your information. You're looking to see what's going on. All right, if we go back over here, okay, see, so it's trying to break here, came down, right? When we were looking at it, it had stopped right here. Now it's trying to break. Now is it going to break and just continue lower? Or is it going to break, come back, retest, and go lower? Okay, we can come back and see. Right now it's pulling back a little bit. Let's look at BABA. I know some people were interested to see what BABA was going to do today. Okay, BABA opened up sort of flat, and it's racing up. Okay, where would be a likely area for it to turn? Probably up around the 200. Okay, probably up here. Now, what kind of trading opportunities could you look for? And I want you to, again, start getting in this mindset of looking for the best setups, looking for the best trading opportunities. So a great opportunity, and you want to think about it ahead of time. Let's say it gets up here. Okay, let's say it gets up here, catches some resistance at the 200, and then puts in a shooting star. Well, you know what to do then, right? Okay, then if it takes out the low of the shooting star, and then you would have a target, I'm just giving you a hypothetical, okay, then you would have a target of your next area of support, which would be this 187.82. So let's just say that happened. It came up here, it catches support, the next candle ends up being a shooting star. You just go below that, and then you take the trade with a target of your next support level. Those are very high probability trades. Now, let's just say that happened. Well, you might say, well, Scott, isn't it likely that we're going to get to the bottom of this candle? It could be, right? So if you take out, like say a shooting star form, you take out the bottom and you get back into here, you're absolutely correct, but this is also a support level. So then that's where you could put a T1 and a T2, right? You could have a T1 and a T2. So if you're playing multiple contracts or if you're playing shares, I'm just making a number up. Let's say you've got 500 shares. Well, then maybe you sell 250 or 300 of them here, and then you hold the rest and you try to get to here. If you're playing options and you have contracts, you got 3 of them, maybe you sell 2 of them here, and you hold 1 to try to run down to there. Okay? So you're just looking to try to identify the best possible setups, and just think about these things in your mind. What is likely? What do I always say? Common sense. What is likely to happen? And then if it starts to play out, you're ready. You're ready. Because let's just say Bob is a name you trade a lot. Maybe nobody in here trades it. I don't know. But let's say it is a name that you watch and trade a lot. Well, then you could like set an alert up here. Put an alert, type in your note, okay? If price rejects 200 SMA and gives me a trigger, look to go short. And then if that alert goes off and you're, busy with something else, it'll give you the message. And then you'll go back to this screen and you'll go, oh yeah, I saw that developing. Okay, I saw that developing. If I get my trigger here, I'm going to look to go short, back down to support, or back down to the bottom of this candle. That's how it works. Okay, we had an alert go off. So we're going to go back to the market. I think we're dropping. Let's see. Yep. Okay. Again, you see why I said I always like to sell early. There's the drop. There's the drop. So we went all the way up here. We know that getting right up here was a $70 gain from here, because we said if we got all the way back up here, it was 70. Oh, no, I'm sorry. This was 70. So this was about a $68 gain right there from here, from our entry, because it was 37 to here. Sunny exited at 40, which would have been right about the top of this wick. Up here, that was $68 gain, and now you see it sold off. So that's why you exit early, right? That's why you exit just a little bit early. So we're back below opening price level, right? Okay, what's our next target? Well, we know right here we've got a wick. Okay, so we'd have to get below there. Then we have resistance at 24.1175, which yesterday was really respected. Okay, I know several of you in here know that, and when I was going back and forth over to the free room, we were talking about that a lot, because somebody asked me, when this had broke through, should I go ahead and remove it? And I said no, because it's been respected, and then you can see it was even respected here, okay, just a little bit ago. So we don't remove it until it's not respected anymore. But I think you guys know that. Okay, so right now we're just sort of in this range now. So I'm going to put an alert just below here. Actually, I'm going to put it just below the wicks, and then that'll tell us if it breaks it, and we'll know that we have a high chance of going lower. All right, so now let's go back and look at some other names. Apple. I see green on there. Okay, Apple gapped up, shot up, and now it's coming back down. You may notice just a little bit ago, the advancers were in like mid 2000s. Look where they're at now. High 1700s. Okay, that's still a bullish number, but what do we know? We know we were just in the mid 2000s, which is extremely bullish. That's when the market was going up. Then that number declines and starts to decline. Well, then that makes sense that the market's going to come down, right? If this number is declining, it makes sense that the market's going to come down. All right, so there's Apple. AMD. Here is AMD. All right, look at this action here. Rolled over, came down, put in our hammer. Okay, so if somebody trades AMD, right there's your entry. And I want to show you something. Okay, so this shooting star, as we roll over, that's what's known as a momentum shooter, right? A momentum shooting star, because it's happening in the move. This here, okay, whenever you see this pattern, it typically signals a reversal, because this is what they call a counter hammer, right? And it can happen either way. You can have, okay, let's just say you have a hammer here, and this shooter is the next candle. That would be a counter shooter. It's countering your hammer. So we had a shooter here, a momentum shooter, and then we had a hammer that countered it. And again, you can enter just above here, and look what kind of move you would have had. All right, now you probably would have exited before the end of the day. All right, but look at the move that it created all the way up to here. All right, we just had an alert on the market, so let's go back, see if we're still falling. I think we are. And the reason I say that is because the advancers are declining. They're still going down. Yep, there we go. See? So we just took this wick out. 24.1175 is our next area. Okay. If it can hold this. It's poked down there and it pulled back, but it's going to probably try to continue down lower here. Man, nice range on this first candle. Look at that range. We got everything out of it we wanted, right? Okay, and this is also, this is where being content comes into play. All right, so if I'm Sonny, right, I just made a $40 move right out of the gate, I'm good, right? Now I am looking for only the absolute best setups the rest of the day. I'm not interested in anything questionable. I'm only interested in the absolute best. Or if somebody caught this move all the way up here, if you caught a $68 move right out of the gate, you might be done for the day. You might be done for the day, right? Because you don't want to do anything foolish and give your profit back, which, I would hope you guys in here are smart enough to know not to do that. And I'm not saying you can't trade, right? I mean, you may turn that and turn around and take another trade or two throughout the day and really compound those gains. But you always got to understand that if you've had a great morning, any trades you take subsequent to that, you're putting your capital at risk. Now, what a lot of professional traders do, let's just use Sonny as an example. He made a $40 gain, right? A $40 move. Don't know what his total gain was, but that's $40 is a big gain. What a professional trader will normally do is take a certain percentage of the profit that they just made, and that's all they'll play with the rest of the day. That way they know they're going to end green no matter what. So I'm just to make math easy. Maybe you made $1,000 or you made $2,000 or you made whatever on a trade, on a big trade. They'll take maybe 50% of that and they'll say, okay, this is all I'm trading with the rest of the day. That way, no matter what, they're going to end up green for the day, right? Before we even got on here today, I was watching something, and the guy made a comment. He said, trading is less about making capital as it is about protecting capital. And there's a lot of truth in that. It's less about making capital than it is about protecting capital. Okay. So here's the start of our new candle, and we're almost there. There we are. Okay, so we're already back down to this level, which we said was going to be highly likely if we took that out. So where's our next level? Okay, it's going to be down here where I have this already marked. I have it marked for a reason, right? Because it's the bottom here. It also is where this candle caught support. So if we can break and hold this level, this is the next one, and then here's your next obstacle, this big wick, right? Then let's just look. Always look to the left. Right? Then if we take that out, then we're likely to get all the way down into here, right? Into this wick. Why? Because there's nothing between here and there that would stop us. Okay, so if it takes this out, then it gets into this big wick, which could provide more support, because that's a big wick. This is what created this move this morning, right? So we know there was aggressive buyers right here. But if we take that out, okay, if we take that out, look, we got a long way until we start getting into more support. This would be the next wick. All right, but first things first, got to break this, then you got to break this, then you got to break this. You know where your obstacles are. So we've got an alert there, and then I'm going to put an alert down here. Since we're going down, I'll set alerts to the downside. Below. All right. Should pop up there. There it is. Okay. So now we got these alerts, and then we'll also put one right up here. We can adjust this. We'll just drag this one down. Put this one just above this candle, and then that'll tell us if price reverses and starts to head back up. Okay. Any specific names you guys want to look at today? Or let's see, is there any Forex names you want me to look at? Let's just go to Euro USD just because it's popular. Okay, let's see what it's doing. Okay, here's Euro USD. Let me spread it out just a little bit. Makes it easier to see the candles. Okay, so here's our price action. Nice structure on the way up. You see this? Okay, let me point it out for you. Okay, higher high, higher low, higher high, higher low, higher high. Then what did we do? Then we started to sell off. Okay, all the way down to here. That's your lower low, lower high, lower low. Now we've changed again. Higher high, higher low, higher high, higher low. You see that? So that's how you determine what's happening. You follow structure, and we've got our support and resistance levels on here as well. Now up here, if I scroll to the left, we probably just created supply up there. Let me just make sure. And yes, okay, that was taken out there. Yep, okay, so this would be fresh right across here. So I'm going to come back and draw it in. Let me just do it like this, it'll make it easier. All right, so I'm going to draw this in. Got to get my rectangle. So this is setting up for a future trade, right? So from the low of there to the high of this wick, we drag it across. Whoop, never. Low of here. There we go. Thinkorswim's moving slow again today. Drag this all the way across. This is going to be pink because it's supply. And then once I have it drawn in, I'll set an alert. All right, so now I need to, I'll just set an alert right here about this level. And I'll go up 1, 64, 63. Okay, and I'll just say look to go short. I just keep them simple. All right, so if we get back up here, and what did we have? I want to show you why, right? Strong rally, base, strong drop. Okay, good candle. That's okay there, and then we really drop away. All right, so we know this is a fresh level of supply up here. We went away a nice distance. Now we're working our way back. We may come back down this way, and eventually we'll get back up here. I'll probably have to extend this. I'm going to go ahead and do it right now because it may be a little while before we get back here. And you don't care, right? You don't care. Whenever it gets back there. That's why you just do this on every chart that you look at, on every chart that you trade. You just keep doing this over and over again, setting your alerts, and then every day you're going to have alerts go off. And then you just determine at that time, is this the trade I want to take? Does my risk reward look like it's, or reward to risk, I should say. Does it look like it's in a proper ratio? Absolutely, absolutely. We'll look at NVIDIA right now, okay? But just showing you guys, this is what you do, right? So this is Euro USD. I'm going to go ahead and take this trend line off. Okay, again, I don't trade off of trend lines. I use them for visuals. Right, so that tells me that when we broke back through there, we're breaking below an upward trend line. But eventually, this will come back up here, and then we'll look to go short. Okay, so let's go look at NVIDIA. There it is. And let's scroll in. Let's see what we got going on. Okay, so today we gapped up. We shot right up to resistance. Okay, didn't quite get there, almost. Sold back down, sold back to where? Right to support. Again, I say this every time. Who says support and resistance doesn't work? We see it every single time. Shot right up to it. Okay, almost there. Sells back down. Where does it stop? Right here at support. Okay, so now you're going to watch and see, okay, what's it going to do from here? What will this candle end up doing? Does this candle, let's give a hypothetical, right? We'll just give a hypothetical here. What if this candle ends up as a hammer? You know what to do, right? So if it ends up as a hammer, if it takes out the top on the next 1 or 2 candles, no more than that really, on the next 1 or 2 candles, if it takes out the top, you could look to go long. Where would your T1 be? Your T1 would be before the top of this wick, because look at that wick, right? And if this becomes a hammer, it's a counter, right? Because we just had a shooting star. So it will be a counter hammer. And then we would think that we were highly likely to continue upwards. Okay, but that, I mean, we got a long way to go, 20 minutes to go on this candle. I'm just giving you a hypothetical of something you could look for. This may break down below here, go to this next level. If it does, okay, you see we've got these lined up, then it would have to get below this wick right here. All right, we just had, I'll come back to NVIDIA because we're going to look at the bigger picture. Just had an alert go off on the market. So let's see where we're at. I think it's still dropping. It is, okay? So that was the alert taking out the bottom of this. Right, now we know this is our next obstacle. We have an alert set. Okay, you see, I want to go back to the beginning and tell you or show you exactly how psychology works. Here was open, right? Follow me on this. What happened at open? We sold down to about right here, right? Right about here, we sold down. Remember? When we first opened, we went red. And what do we know, right? About 85–90% of the time, the first move is big money trying to get retail traders out of the way, okay? Then we blasted all the way up here. Okay, we already know, right? We blasted all the way up there, right before this resistance level. We turned around, now we've come all the way back down and we're still selling down. Okay, big money is totally in control and retail traders who aren't knowledgeable are freaking out. Okay, you guys I'm sure have seen those videos or those memes that make fun of retail traders. There's one, somebody created a short video and it's like no matter what they do, the market does the opposite. Right? So at the beginning, they go long, the market goes short. So they hurry up and they try to get out of the trade, right? They sell, 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 sell. As soon as they sell, the market blasts up. Okay? So then they're trying to buy, 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 buy. And then they get up here and it turns around and goes against them. Sell, 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 sell. They're always chasing. They're never in front of what price action is doing. This is why I always say we're never stressed in here. We're always one step ahead. Okay, we know what's likely to happen. So we don't get trapped at the beginning. Right? We don't go short on that first move. We gathered our information. And we already knew based on this that we should be going up. And I told you guys in the room, if we took out the top of this wick right here, it was highly likely that we're going to go here and then here. And we did, right? And we did. And then it sells off. So big money knows they, at this point, well, every day, I shouldn't say at this point, every day they know they're in control, but they know it's almost like they're the, what is it called, a marionette? They're controlling the, the strings, and they just pull the strings on the retail traders. They do it every day. when you start realizing that, you know what to look for. We know, right? We know where they're likely to buy and sell. We know based on candlesticks and most specifically price action. We know where the highly probable trades are, and we know to get out, right? Get out a little bit early so that they can't do this to us. Right? I showed you up here. I would have been out just a little bit early, and this is exactly why. All right, so we're moving back down. Hey, Sonny, congratulations on that trade, man. That's awesome. It's awesome. We were talking about you. I let everybody know that you were able to clip off $40 on that move. That's sweet. And it did go. You know, we were just talking about that, and I'm sure, I don't know how long you've been in here. We got to T1, and then we got right up to T2, and then look at the sell-off. That's what we're talking about right now. So, yes, I'll look at Roku for you. And I'm going to go back to NVIDIA as well. Okay, so we have our alert here if it takes this out, and we have an alert here if it reverses and goes back up. Okay, so let's go back and finish up with NVIDIA. Give me a second to get back to it. There we go. You're absolutely welcome, Sonny. That's what we do, right? That's what we do. We're trying to help people be consistently profitable and take the best trades. Okay, so I said we were going to look at the bigger picture on NVIDIA. So we go to the monthly. Okay, monthly, we're red, but what are we forming? Right, we're almost to the end of the month. We're forming a hammer. So that's something to keep in mind. Sonny, I'll get to those as well. Awesome. Yep, we're going to go NVIDIA, Roku, and then we'll go to those two names, Space and NOC, which I believe is Northrop. Okay, so on the monthly on NVIDIA, we're forming a hammer. Something to keep in mind. Now, people who trade strictly price action, right? They wouldn't have any support and resistance. They wouldn't have any moving averages. They wouldn't have anything else on their charts. What they would look for, right? Let's say that this monthly candle, let's say tomorrow was the end of the month, and this is how the candle formed. They would be setting an alert at the top of this candle, and if that alert went off, like they would then be predominantly looking for nothing but upside moves, right? And what would we have? Look at this. Okay, this is on the monthly, remember that. So these are very powerful. This, if it ends up this way, would be a counter hammer, because we have a shooting star here, or somewhat of a shooting star. I don't know if this is quite twice, you know, the tail should be 2 to 3 times the body. Okay, but this would definitely be a hammer, and that would be a counter hammer, which would tell us if the top gets taken out, it's highly likely that it's going to continue on. Right? When a hammer counters a shooter, or vice versa, right? If the trend was opposite and a shooter counters a hammer, it is highly likely that the second one, so that'd be this one, that if you took the top out there, the trend's going to continue. Okay, so here we are in the monthly. Now let's go to the weekly. We're going to be right in the middle of a week, so we can go ahead and look at this week. On a Monday or Tuesday, I typically look at the last week, which was a spinning top, right? After a strong down move, here we are on the weekly. Look up here, shooting star. Okay, you would enter anywhere below there, and then look how far it sold off. Okay, so it sold off all the way down to, say, 180 from 284, $104. 1, 2, 3, 4 weeks. 4 weeks, NVIDIA sold off $104, but then we put in a spinning top. Okay, so a spinning top or a doji, not quite as powerful as a hammer, but they act the same way if they come after a strong move, up or down. Okay, this is a strong move, because look at these. Look at the normal size candles on NVIDIA. See this? These are normal. Then look what we had. Strong move up, strong move down, and we get this on a weekly, right? We get this on a weekly, and then price reverses. Here we are this week. We're in the middle of the week, big green. Does it make sense? We use common sense? Absolutely, right? Big move up, big move down into a spinning top, which is a candle of indecision, but because it comes after this strong move down, it's highly likely it could be a reversal. And that's exactly what we've had. All right, now we go to daily. Now we go to the daily. We'll look at what it did yesterday, which was big green. Okay, today we gapped up, we pushed up to resistance, then we sold back down, and right now we're hanging out, as we saw in the 30-minute chart, down here around support. So we're going to see, do we catch support here? Okay, on the daily, does this end up being a resting candle? Okay, these things should be going through your head, right? You're already developing and setting up potential trades. What if it ends up as a spinning top? If it ends up as a spinning top, it could be a resting candle. And then you would look for the next day, does it take out the top of this candle? So let's say, let me squeeze it in. Let's say that this body ends up being a little bit smaller, a true spinning top. Well, then on the next day, if at some point you take out the top of that, that would be an excellent place to go long. Excellent. And then you would look for your targets, right? Now we're on the daily right now, but I'm just giving you some insight. All right, so if you took out the top of this, your first target would be right up here. Right there. So that would give you a move of about $7. And that is on NVIDIA, that's a pretty good move, right? And then if you got above there, you'd be getting into a gap, which could act as resistance. So I'd be a little bit careful going any higher than that. So I'm just telling you what I would do, all right? Let's say this ended as a spinning top. The next day, at some point, you take out the top of this, so you go long, you put your nice tight stop in, and you'd have a target just below the top of this wick, looking for about a $6 to $7 gain. And then for me, I'd be out because then you have a gap. Then you got to deal with a gap, and they're typically going to be resistance the first time they're tested. All right. Now, Cathal, I will definitely get to that. Let me move on to Roku. I'm just going in order, guys. Just going in order. Let me get to Roku. We're not going to go through all of this on every name, but I wanted to go through normal, bigger picture analysis on at least one or two just to show you. Okay, so here we are in Roku. Let me go to the 30-minute first. Okay, so here's the 30-minute. It opened relatively flat, sold off, right to the middle here, making a little bit of a move back up. Excuse me, my mouth's dry. I don't have any water. I may have to go get some water here in a minute. Trying to make a move back up. Now, what do we know? If we get back and get above about 50% of this candle, then we start looking for it to totally reclaim. All right. If it stays down here, like in the lower, say 33%, this could end up just ending up as a resting candle. We got about 7 minutes to go. And then if that's the case, we just talked about it. What would the scenario be? Then we would look, do we take this out to the downside? And if we do, where would our targets be? Okay, we got a wick there. It's not real big. It shouldn't be too difficult to get below that. And then maybe, okay, I'm just saying again, if that ended as like say a spinning top and then you took this out, I mean, it's kind of set up that it could really drop, right? It could drop conceivably all the way down here or maybe even at least to the bottom of that candle. Now, if we would reclaim about 50% of this candle, get above it, well, then that kind of starts changing things. Then you might start to look for it to melt up from there. All right, so you got about 6 minutes to go. All right, so that hopefully helps you there on Roku. See how Roku right here rolled over? Whenever you see it starting to form this, you should always be careful. Okay, you should always be careful. And we got up near this resistance level, rejected down, came back down, made another run, but couldn't quite get there, and then it rolled over and sold off. Okay, now what was the next one? Roku, okay, Space. I'm going to make fun of this. I know some of you trade it, but Space is, to me, it's a nothing name because it had that huge run up when the stock came out on nothing, all right? And that's why it fell like it did. All right, so here we are. Not saying you don't trade it, right? If you can make money, it doesn't matter if it's on nothing or not, right? If there's no basis for the value. The value is perceived. That's what you got to remember in the markets. Value is perceived value. It doesn't have to be real, right? If people think something's worth something, that's all that matters. Okay, so here we are, opened relatively flat, and as you can see, it went up. Actually, it went down first, then it went up, and now it's pulled all the way back down. And so far, you can see the 200 is acting as resistance. Now we're getting close. We've got about 4 minutes to go. If this ends as a small candle here with a small body, I would then be paying attention, if this is something you trade, if it took the bottom out. If it took the bottom out, then you might look for more downside. Potential obstacle would be this wick, and then this wick right here. But if that ended as a small body, and it may just flush down on its own, but if that ended as a small body and then you took out the bottom here, I would look for more downside. And you know that you have an obstacle here and an obstacle here. You also have your support level, 1494. If you would happen to clear both of these, man, it could really drop. It could really drop. Okay, so that's Space. What is the next one? NOC. I have that on my list. I believe that is Northrop. Yep, Northrop Grumman. They're a defense contractor. All right, so here we are in the 30-minute. You can see what happened. Okay, price from this shooting star, which was, okay, you would have created, I don't have it drawn in. I don't trade this much. I have it on my watch list because it's a defense name. So I like to have a good mix in my watch list. That's why it's in there. I don't normally trade it much. That's why I don't have this drawn in, but you could have had that drawn in, and I'll show you what happened. Obviously you can see it. All right. So we know because of this huge drop away, even though we don't have a big rally up here, we know that's supply because of this drop. Okay, we know it. In fact, I didn't draw that correctly. Hang on. It should go all the way up to the top of there. Okay, to the top of that wick. All right, we know this is supply because of this huge drop away. All right, so this isn't the best entry into this, but when you get a huge drop away, as you can see, by far, that's the biggest candle on the screen, without a doubt, right? That's almost a chaotic candle for this chart. So you know there's supply there. So we came down, formed a hammer, came back up to it, shooting star, and then look at it sell away. Look at that. Look how far it sold down. Huge move. All right, then we kind of caught a little bit of support down here at a support level, right? Up, down, so let's go higher high, higher low, higher high, higher low, now higher high again. And let me see here. Okay, right now, it's got to get over this. Okay, they're not huge. It shouldn't take it much to get over that. Okay, it needs to get over that. Then you have your resistance level, and then right up to here. This would be your next point. Okay, so if it can get going again, get back up above this wick, get above these. I mean, it would have a chance to run like up into this area here, like the top of this red candle. What is that? 297.63. Okay, but it has to get back up above here. Okay, right now this is showing that it's getting some selling pressure right in through here. Right in through here. Okay. Sonny, I see your note on space. Are you long or short on space? Just type that in the comments while I keep going through here. All right, so this is NOC. That's what you're looking at there. Now, while I'm on here, I want to show you something because there's a very good example. See these candles right here? Okay, there is a price action scalp. What do we have here? 3 candle pattern play. Wide ranging red candle, resting candle, right? A doji or a spinning top, or any kind of candle with a nice small body in the lower 25% or so, right? And then what do we know to be true? It's highly likely, if you take out the bottom of this candle, that the next candle or the next combination of candles are going to be similar in magnitude to this move, right? So if you enter here, I'm just going to tell you, like imagine you don't know anything else. Let me get over here. I want you to be able to see it. Okay, here's where you're at. This is real time. Imagine you're in real time. You see this candle. All right, then what is the next candle? Whoop, I went the wrong way. Okay, then the next candle, you get this. This is how it closes. What should you be thinking immediately? Immediately, what should you be thinking? I have an opportunity for a scalp right now. If I take the bottom of this candle out, measure this, and what you're really measuring is kind of from here to here, the body. So the body of that candle, 299.11 to 290.19, so that's basically a $9 candle. So what you can say then is if you take the bottom of this out, you're going to have a similar magnitude, maybe a little bit less, maybe the same, maybe a little bit more, but a similar magnitude to this candle for a scalp. So in my head, I would be saying if I take this out, I'm maybe looking to try to get 6, 7, maybe $8. I'm not going to necessarily look for 9, although you may get it. All right. So then what happens? There's the next candle. Okay, and the next candle, 292.50, 283, was $9. The body. I'm talking about the body. Or excuse me, the range. It was the range, not the body. The body open 291, close 284. The body was about $7. All right, but from here, okay, you could take it down here. Like I said, I'd be looking to probably make 6 or 7, and then I'd just be out, right? Because you don't know anything else, right? You don't know anything else. That's just a very high probability scalp. $6, $7. And it's like so highly probable. All right, and then if I just go on to a next candle, it went lower. All right, so maybe maybe you get down here and you say, hey, I'm going to throw a trailing stop on here. I'm going to put a trailing stop of about 50 cents on here. Something like that. Well, then maybe you catch this too. And then when it bounces, you just get taken out because you have a trailing stop. There's all different kinds of ways to play it. I'm just trying to show you in real time when you see this, okay, and then the next candle looks like that. The next candle looks like that. You should the gear should be turning. Smoke should be rolling out of your ears, right? I've got a scalp in play here. It's developing. So if I can take the bottom of this out, there you go. I know I should have a similar move as that. Okay. All right, Sonny, you're short on space. I think that's good, especially based on what we just looked at, right? Okay. And then, all right, what was next? GBP, JPY for Cathal. So let's do it. That should be on my list. Right there it is. GBP, JPY. Okay, so here we are right now. Okay, we're selling off right now, and we are getting to an area where it could possibly catch some support. All right in here. All right, now you can see what happened. It came up into supply. It sold down, but not very far. All right, and I am working on something. I'm going to give, let's see. Most of you are on here. There's 6 of you on here. I'm going to give you guys a little insight to something I'm working on. I kind of told Grayson last night. So I have a friend who is a professional Forex and futures trader. And he also is a trading instructor. He doesn't have a room. He doesn't have a trading room, but he travels all over the world and he gives seminars and he trades basically Forex and futures. I don't think he trades any equities, but something that he suggested that I'm just kind of in the very early stages. I just put it on yesterday. So you might see down at the bottom, I have this modified RSI indicator. I don't like indicators, all right? He does not like indicators, but this is the one that he uses, and he does not use it to trade. He uses it as a filter. So he only trades price action and supply and demand. That's all he trades. Very similar to how I like to trade. Now, I do also trade support and resistance, but he trades price action and supply and demand. What he found years ago, and I mean, he's been using this for years. I'm going to say 9 or 10 years. Okay, he added this. So if you look down here, okay, he modifies it. These are his settings, and I've already started playing around with them, but I'm going to try to use his settings for a while to see how accurate it is. So he puts it on a 13 period, and he goes 60-40. Okay, the default setting for RSI is 14 periods and 70-30. Now, if you remember, that other guy who was a Forex scalper, he suggested trying his modified, I think, was 6 periods, and then it was 80-20, if I remember right. Don't hold me to that. But remember, we already disproved that his system didn't work in high volatility. It may work in normal volatility. I'm talking about the other guy, but his system was horrible in high volatility. So I just kind of had that at the bottom of my screen for a couple of weeks and quickly disproved that it wasn't something I was interested in. But this other guy, this guy's a friend of mine. He's a professional. Like I said, he's a world-renowned trading instructor, and he goes all over the world and gives seminars, but he primarily is a professional trader, and he trades Forex and futures. So this is how he uses it as a filter. You see right here where we came into supply? Okay, right here. What you want to do is you want to look down, right? And if you're looking to go short here, you want this to be below 60. Now that seems exactly the opposite of what RSI would tell you, right? Okay, what's RSI supposed to show you? Oversold, overbought, right? Overbought, oversold. In their traditional indicators, right, if you were right here, they would be agreeing with you. Okay, well, you're in supply. You should be going short because you're overbought. However, he found years and years ago that that's not the case. And I've told you before, this is why I don't typically like indicators, because they give you so many false signals. And he found out that RSI is actually, when you use it in conjunction with supply and demand, it's actually exactly the opposite, right? So if we were using this traditionally, it would be telling us to sell. But what he says is if you get into supply and this is up above 60, it's probably not a trade that you want to take. Or if you do, you want to just make a few pips. You know, if you're lucky enough to get maybe 10 or 15 pips and just get out, because it's highly likely that it's going to bounce and continue higher or even go straight on through. What did it do? Let's look, right? Here's where it came up in, and if we look straight down, straight down, we're above, right? We were actually at about 66, 68. And what did it do? Exactly what he says. It took this little bounce and it went straight on through. All right. Now, most of us, we'd have, and he would too, have our stop up here. So we wouldn't have moved our stop yet, and then boom, we would have got taken out, and we would have lost. Let me look. We would have lost, I think it's about 38 pips, something like that. Yeah, there it is. Let me bring it back up. Come on. 60, 02, maybe more than that. Anyway, we would have lost because we wouldn't have moved our stop yet. And then look, it reversed against us. Okay, so it's showing here that his strategy or his filter is correct. Yeah, Al, I see your comment there. So like what he has said about this, again, he's not using it to trade. He's using it to filter out trades where you could potentially lose. And if it goes for you, the move should actually be greater than what you expect. All right, so let's just say the converse to this, right? His rules say you would not take this trade because it would be highly likely that it's either going to continue on through or you're only going to get a small bounce and then go against you, which you're going to get stopped out. The converse is if you're below 60, anywhere below 60, you do take that trade, and that you're probably going to get a bigger move than what you expect. Now, what does he mean by that? In most cases, you take the low of the origin of the move into supply. So that'd be down here, right here. This was the origin of the move up here. He's saying that if you use this as a filter to take the trade, if you were below 60, right, bouncing out of supply, that it's highly likely you're going to get at least here or lower, right? Now, I was doing some back testing last night. On the few that I was able to test it on last night, I didn't keep an exact tally, but I would say it was probably working about 85% of the time. And it was working the way he said, just like here, right? This would be a successful test of his system, of his filter right there, because it said don't take the trade. That would have saved us getting stopped out. If it would have been under there and you take it, then you're expecting it to at least get here, if not lower. Yeah, Al's agreeing with that. So I'm going to test it out. You're going to see it on the bottom of my screen for a while, and I'm going to see. Because if it works, we would always like to have another little edge. I mean, we already have, it already works very, very well what we do. But if there's something that we could add that like filters out, even if it filtered out just a couple of trades that would have went against us, right? Because again, he would have, if you didn't have this filter on the bottom, this is a trade he would take, right? Because we're coming into fresh supply, right? There it is. It's never been tested. Look at that. Strong rally base drop. I mean, that's as good as it gets, right? Never been tested. Then you get over here. So in your mind, you're thinking this has got to be an awesome trade, but you add in the filter. And the filter would say, no, odds are against you. RSI, even though traditional RSI would be saying you're overbought here, you should go low, what he has found, and look at this, I want to show you something. And this is something that he was showing me. Look at this. There we go. Okay, what is that showing you? Right? What is that showing you? Where is the momentum? Where is the momentum? Look where we're at. Right? The momentum is up. And I've told you guys over and over again, and I think you guys believe me. I know a lot of retail traders wouldn't, but I think you guys do. You can stay overbought or oversold way longer than you think you can. Way longer. There are some people who trade the inverse of the RSI, meaning whatever the RSI is telling you to do, they're trading the opposite of it. Okay, and basically that's kind of what he's saying here. He's only using it as a filter. That's not why he would take the trade. Okay, but you guys see this here? Look, momentum is up. And we were, okay, you wouldn't have known that at that time. Again, let's do this. Let's scroll over here. All right, this is all we would see at this time, right? And then I'm going to move it one candle at a time. So that's all we know. But look at the bottom. Look at the bottom. Look down here. What are we doing? We're trending up, right? So next candle, oh, we go even higher. Next candle, this is where we get our little bounce. So we go short, right? We put our stop above supply. Next candle, oh, we kind of caught some support there. Next candle, moving back into the zone. Next candle, uh-oh. Next candle, we're stopped out. You see that? And look down here. We were trending up. It made sense. So what he found over like many, many years was using 60-40. And if you're looking for a bounce out of supply, you want to be below 60. If you're above 60, that's telling you the strength is too strong to the upside. Vice versa, if you're coming down into demand, you want it to be above 40. Because if you're below 40, then the strength is too strong to the downside, and you're highly likely that you're either going to break on through demand, or you might get just a small bounce and then break on through and get stopped out. Yes, so that's what I was just saying, right? It's both ways. So if you're coming down into demand, right? we're going to use this right here. Okay, just say price had come down. Like if we hit it right here, you come straight down. As long as you're above 40, then you take the trade. If you're below 40, you just skip it. Or you could enter, and if you got any kind of a bounce, got like 10, 15 pips, you just get out. Because it's highly likely you're only going to bounce out a little bit and then reverse. But he's saying just don't even take it. And that'll stop you from getting stopped out. All right? So I'm just giving you guys a little preview. I'm working on it. I'm testing it. That's why you're going to see it at the bottom of my screen. If it's something that does play out, like I said, now, very, very small sample size. I tested it on a few names last night. And again, I wasn't like literally tallying them. I was laying in bed with my laptop on my lap. And as I was going through, in my head, I'm going to say it worked about 85% of the time. You know, there were times, and he would even tell you, there's times that you're going to miss great moves. There's times where right here, it tells you not to take the trade, and the thing just like absolutely plummets, right? You're going to miss them once in a while. But so far, I'd say about 85% of the time, it does filter them out correctly. And I can definitely tell you the ones where it was telling you to take them over not take them, the moves were pretty dramatic. They were almost always getting down to the origin low, right, or below. Or in this case, if it was moving down into demand, wherever the origin high was, at least getting there or higher. So they were big moves, and that's why he started using this years ago. Don't hold me to this. I want to say it was about nine years ago that he said he started using it. And he got it from somebody else. Like somebody else like showed him way back then or showed him some version of it because he came up with his own settings. These are his settings. And I was playing around with the settings a little last night. I was like making it a little bit shorter. The only thing about making it too short is if you make it too short, then the numbers down here are going to get like this. They're going to be like a cardiogram, right? You do want them to kind of flow a little bit more, because that helps you to identify stuff like this, right? So you can see that you're trending up. All right, so hopefully that answers everybody's question. You'll know, I'm not going to tell the free room. Most of the time I cut it off on my chart anyway, but whenever I'm on live streams, everybody's going to see it on the bottom. I'm not going to talk about it, but you guys in the premium room will know why it's down there. So I'm just giving you a little preview. All right, so now let's get back to looking at, at the pound yen. So we went up, we're selling off this, and we're right there now. See that? If we clear this wick, then this wick becomes the next obstacle, and then it would be this supply zone, or excuse me, this support level. Then it would be these wicks over here, right here, okay, to the downside. We also know, I'm going to extend this across. We also know that we have demand down here. That's why I have that alert set. Let me get it right. All right, so when this alert goes off, based on everything we just talked about for the last 5 to 10 minutes, when this alert goes off, whenever that is, whether that's today or a week from now or 2 weeks from now, right? Price could come down and go back up and come down and eventually, days later get over here. But whenever this alert goes off, the first thing I'm going to do is I'm going to look straight down and I'm going to see where we're at. As long as we're above 40, I would look to go ahead and enter the trade and put my stop, just a penny or two below here. And then wherever the origin of that move was. So again, just trying to talk you through this. Let's say this just goes all the way down and bounces here. This would be the origin of the move. His strategy says, the filter says, that you're highly likely then to get back up to at least there, if not higher. Now here's where a caveat comes into play. We mostly scalp and day trade these. A move like that would most likely take more than a day, right? You might be in that kind of a trade for a couple of days. What you can do in that case is you could have little targets and say, okay, once I get up here, I'll take profit. I'll look for a re-entry, all right? I'll take profit here. Maybe price pulls back a little bit and starts back up. I'll re-enter. Then maybe when it gets here, I'll take profit, and so on and so forth, knowing that it's likely to go back up here, but you don't necessarily have to sit in the trade for days or maybe a week or whatever. You can take profit along the way. And that's something he talked about, was that you can do that, because he mostly intraday trades as well. So in a case like this where it was a really big move and this came all the way down in here, he would probably take profit almost every day until it got back up here or cleared, instead of just sitting in it the whole time. Does that make sense to everybody? It's kind of cool. I mean, it is kind of cool as a filter. I would never trade indicators. Okay, I used to do it. They're just so unreliable. But when you figure out a way, and it appears he's figured out a way to use it just as a filter, that's something that I would consider. Okay, let's go back and look at the market. Okay, we'll be on here maybe another 5 or 10 minutes and then we'll get off. Okay, so look what the market did. Came all the way back down here. It could not clear this wick, right? That's why this alert never went off. It could not clear this wick. Then what did we do? We put in a hammer, and I apologize. I mean, obviously we were talking about something important, okay? But where could you have went long? Right here. Your first target we would have already hit, would have been opening price level, okay? I don't know that I'd have a target too, because look at this wick, right? Maybe 50% of it, maybe, or maybe the top of this candle over here into this wick. Okay, but this could have been a scalp right there, right up to opening price level. You're welcome, Cathal. You're welcome. And again, welcome. We're so glad to have you in the premium room. I think you're going to get a lot of value and a lot of benefit out of being here. It's where I spend most of my time. Yesterday in the free room, I was just trying to show the free room the kind of stuff that we do and talk about over here. but it's even so much more than that. Okay, I'll give the free room bits and pieces and a little taste now and again. I'm obviously always giving them charts. I'll answer any of their questions. I won't go into too much detail on the strategies that are talked about and utilized over here, because that wouldn't be fair to you guys, the premium members. And they know, the guys who are already in here know, I've already told them that before. But I'll answer people's questions. If they give me questions, I'll answer them. But like the other day, there was somebody who just kept asking me, well, what about this, and what about this, and what about this on supply and demand? And I just eventually told them, I'm like, listen, I can give you a little bit. I just can't go into great detail because that wouldn't be fair to the premium members, because this is where the supply and demand stuff, we have it in lessons. We talk about it every day. Now, they see it on my charts, but I just don't get super deep with them. So I think as you spend time here, you'll find a lot of value in being here, and we'll point these trades out in real time, just like we did this morning, where Sonny was able to catch that $40 move. And as you can see, it actually went all the way up. It was a $68 move. That was T2 up here. And again, because we were just doing a little teaching, we missed this. That you can see, it would have played out perfectly. Top of this, so let's say 24.28 to, I already know that's 24.44, $14 move, right? No, wait, $16 move. $16 move that was highly probable. How do we know it's highly probable? I want you guys, especially you, Cathal, you're brand new. These guys who've been in here are already starting to get this. How do we know that the move right to there is highly probable? Once we clear this, we look to the left. Is there anything other than the 20? And we know, right, recently it hasn't been respected. You got to go back over here to see where the 20 was respected. So we know it's highly probable that we'll make it at least to the opening price level. There's your target. $16 in a matter of probably about 15 minutes or less. $16 move, I should say. You're going to make a lot more than that, right? If you, let's see, if you had one standard contract, $16 times 50, that's $800. That'd be an $800 move on one contract. If you're playing options, conceivably, depending on what strike price you played, you make a lot more than $800, because a big move like that quick, you're really going to make some money. Now, vice versa, in high volatility, a sharp move against you could really cost you. All right, but we know in here, in the premium room, well, in the community in general, but in the premium room especially, we know how highly probable that move is right there. There's nothing to stop it right up to opening price level. Yeah, there you go, Sonny, $800, exactly. Okay, so Sonny probably played one standard contract. You get $50 per dollar, $50 per point, okay, 25-cent increments, $12.50 per tick, right? So one contract got you $800 right there. $800. Again, or if you played options, it would have been whatever the strike price was paying based on delta and beta and all that kind of stuff. Okay. All right. Yes, Sonny, obviously targets vary, right? But we know that one right there, that's where we would have picked it. I think I probably could have asked you guys and you would have told me that that would be the target, right? Just based on what we see here. And if you wanted a second target, which wouldn't be as likely because of this huge wick, would probably be just to come straight across there. But for me, I'm ultra conservative right there. That would have been the target. We easily hit it, and it happened very quickly. And you're out, right? You're out. So earlier this morning, again, we talked about this. Sonny, you weren't on. We were bragging on you. You got that $40 move. You get out. And then the only reason you would take any other trades is if you see setups like this, because they're so probable. They're so probable. Okay, it's trying to go higher. Look, it's trying. I'm going to put an alert up here and see if we would get there, because this would be like a T2, but again, I wouldn't take it. I would have just sold right there. Right there. Okay, but we'll see if it gets up here. But you got this big wick now. right? You got this big wick you got to try to get over. A guy that I know, it's actually the same guy that gave me this. He thinks it's highly likely that at some point today we're going to sell off, and it may happen. I don't know. Again, you guys in here know me. I don't like to try to predict stuff like that. We just play price action, and you can see it pays, right? We just play what we see. I don't try to predict. I don't try to say, hey, we're going to just plummet here later. And he didn't say we're going to plummet, but he believes that at some point today we're going to sell off. And he's got reasons for that, but so I'm just kind of, in the back of my mind, I'm going to see if he's right? I'm going to see, do we end up selling off? Now, we just put this big wick in, which that's going to be hard to probably get back above. Okay, so that may make it more likely that we'll see some downside here in a little bit. Right, so we'll look and we'll see. Do we get setups where we either get a shooting star, or do we get some kind of like rally base and then start to drop? Something like that. If you see something like that, you might take a short, and then you would look like this wick here. Okay, you'd have to get through there, so you'd maybe have a target somewhere in the wick if price reversed. So all of these things should just always be running through your mind. Yep, you got it, Sonny. You know the types of stuff to look for. So what he's saying there, Cathal, especially since you're new in here, you always look left from current price when you enter a trade of where your likely targets or obstacles would be. Moving averages, wicks, support and resistance levels, and of course, supply and demand. Okay, so that's how you determine what your targets are. If it's a trade I give to you, I'll tell you what I'm looking at. I'll say this would be T1. Just like this morning, I said this was T1 and up here was T2. And we got them both, right? This was the highly likely one. T1s are always going to be way more likely than T2s. That's why if you're in with either multiple contracts or multiple calls or whatever, you should always take some off at T1. I would even say the majority. If you're playing 3, take 2 off. If you're playing 4, take 3 off, so on and so forth, because you're locking that in, and then you leave 1 as a runner. Okay, anybody have anything else? It's about the time we normally get off, between 10:45 and 11. Anybody got anything else for me today? Because if you do, I'm more than happy to answer those questions before we end our private session this morning. I feel like this has been a great session this morning, guys. We've got to cover a lot of really good stuff that I think is going to help you even when I'm not pointing things out. And guys, that's always the goal. The goal is that you learn to see things the way I see them so that you can take the trades on your own. I can't look at everything, right? Even if I had, even if this wall back here was covered with monitors and there was hundreds of names up there, you can't look at everything. So I know you will have your basket of names, like I have my watch list over here. You have your own basket that you watch, set your alerts, draw in your supply and demand zones, put your support and resistance levels in, and then you'll start to see these things setting up on the names that you watch. And then you should be able to take those trades on your own. This works on anything. It works on Forex, it works on futures, it works on stocks, it works on metals, anything. Anything that's traded, this works. Sonny, I'm trying to follow you here. Drop, base, are you talking about right here? Drop, base, and then it kind of rallied? Is this what you're talking about? Or were you talking about this? Drop, base, and it rallied way over here. This would not be a continued supply zone because it's already been tested, right? So now we'd have to create something new over here, okay, for demand. Now, this wick still acts as support, right? Okay, so that's one of the nuances of supply and demand. Remember, so you see this, if this wasn't taking out fresh supply, it is, but say this supply zone wasn't there, this would be supply. Okay, this green candle following this drop away, right? Because we would have had rally, base, drop. That would be beautiful supply. Okay, but it's not because it took out this zone right here. This move was created by the existing unfilled orders that were sitting here. Okay, we didn't create anything new. It was because of what was already there. So that's one of the nuances. So now, before you draw in another supply zone, you have to create it. Or there may be some further above. Let's scroll in. I might have to go to a bigger time frame. I don't know if I've even drawn any in higher, because when I originally drew these in, we were way down here. Right? You see, I drew in all these different levels, but we were way down here at the time. Okay, so I don't have any more levels drawn in yet. So all you would do, if you trade on a 30-minute, whatever time frame you trade on, draw them in on there. Okay? So if that's a 15-minute, a 30-minute, a 4-hour, 1 hour, a 5, whatever you trade on, draw them in there. Just know, the smaller the time frame, the weaker the zones are. The bigger the time frame, the stronger they are. Okay. We just got an alert. Let's see what it is. And then, Sonny, I will go back and look at space. Hang on. We just got an alert. I just want to see what the alert is. Oh, the alert was we did make it right back up here. That's what the alert was. I was saying if I had a T2, it would have been right there, so we would have hit it. But I really wouldn't have. I'm just saying, I was saying if I would have had a T2, it probably would have been right there, and we've hit it. Okay, on this scalp, just looking at that huge wick right here would have been the only target I would have had. $16 move, and just get out. And we've already talked about it. You would have made $800 in about less than 15 minutes at that time. Okay, so we'll see here. All right, now on space. Let me go back over and take a look for you before we get off here, Sonny. Okay, you're talking about this then. Drop, base, rally away, correct? That's what you're talking about. Drop, base, rally away. Right? And there's your hammer. Okay, so there could have been a trade right there. You enter here. You look to go long. I know you said you're short, okay, but right here, you could have looked to go long, and target would probably you could have maybe had a T1 here and a T2 right at the top of this candle. T1 here, T2 top of this candle. Okay, on space. Oh, what didn't happen? I got you. What didn't happen? I got you now. Yeah, so here is what happened. We dropped, we based. The hammer is the key, right? The hammer is the key. That's why I say typically for a resting candle, what are we looking for? We're primarily looking for two things, a doji or a spinning top. A doji or a spinning top. Or a shooting star would be okay, right? So if this was turned upside down and this was a shooting star with the small body right there, then that would be saying more downside. But because this was a hammer, drop, base, and then once you take the top of that out, that's a trade right there. That's a trade. You're in, here's your first target, and then your second target would be the top of this candle. You wouldn't want to challenge the wick, right? In terms of a scalp, could you take it out? Absolutely, right? But I'm just saying for the highest probabilities, this would be your T1, and right here at the top would be your T2. We're not that far away from it right now. Okay? Just highly, highly probable trades over and over again. Plus, what did it bounce off of? It bounced off the 200. I think we talked about that a little bit before, right? When we were here, that so far it's been respecting the 200 this morning. Okay, now it's headed back up. It's almost there. It's almost up to where I said, you know, you'd put a T2 and be a nice little trade, right? Nice little scalp on space. All right. Now again, Sonny, that doesn't mean, and I can't remember. Let me scroll back through. Trying to see. Okay, you said you had one weekly put, and it was $16.50. All right, so doesn't mean that it won't turn back around. Okay, we don't know that, right? We don't know that at this point. Is it going to be able to get over this wick? If it got over that wick, then, you know, that brings in more upside. Okay, if it gets over this, that brings in at least probably here. I got to scroll back to the left. Okay, we're right here right now. See this wick over here? I know it's small. That's where we're at right now. We're just below here. Okay, so that's kind of why it stalled out where it did earlier. All right, stalled out, went back down. Then we got the base and we're headed back up. Now it's got to get through this. If it gets through this, it starts becoming more likely we could get here or maybe even up to supply. I'm not saying today. I mean, it could, but just giving you the probabilities. But if it turns back here, right, if it turns back there, then it could start down again. And where would it go? Well, right now it keeps respecting the 20. The 20 might, you know, kind of move down like that. So that could get you back down below. So anyway, you're going to do what you need to do with that put, but this is just the current reality of where we're at. And I said this, I think, in the free room yesterday. Somebody, was it in the free room? I don't know. Somebody had asked me about longer term trades. I'm just personally, in this environment, I'm not interested. Okay? There's just too much. There's too much volatility, and things are up and down and this and that. Now, we know where they're kind of likely to turn, but in between there, you know, they're making a lot of moves. So I just think these are the higher probability plays, right? Take a trade like this, you know, either get out here or get out right there. Yep, we just hit it. See that? We just hit it. So we would have made it to the top of this candle. You just take that trade, take your money, and you move on, and you find another trade like that. You know, just like ES this morning. You just find trades like those, and you just take those over and over again each day, and you don't even worry about anything from a swing trading perspective. I'm just not even really interested in even trying to hold anything overnight right now. It's just, you know, you never know what's going to happen, right? Like last night, news comes out that the deal's going to go through supposedly, or news may come out that, you know, coronavirus cases have doubled and, you know, the market just absolutely tanks and you thought it was going long. So right now, the highest probability trades are during the day. They're day trades. You're welcome, Sonny. I just saw your comment. They're day trades. They're scalps. I'm not afraid to day trade. I just would not want to be swing trading right now. That's personal preference. I'm not saying you can't. You do anything you want, right? But I'm just telling you, the highest probability trades, the highest probability trades anytime are scalps and day trades. I've told you guys this before. Two, that's like number 1 and number 3. 2 of the top 10 hedge firms in the world that manage billions and billions of dollars, they do nothing. I shouldn't say nothing, but like 95% of what they trade are high frequency scalps and day trades, because mathematically they figured out years ago from a mathematical modeling, probability, statistical standpoint, they are much more likely to be right a higher percentage of the time on shorter trades. And it just makes sense, right? Right? So is it easier to remember what you did this morning, 2 or 3 hours ago? Or is it easier to remember what you did 3 weeks ago on the same day at the same time? I know that's like kind of a bad analogy, but you see what I'm getting at. The probability is you're much more likely to know what's going on right now in a short period of time than you are over a longer period of time. And so many more variables can come into play. That's why when they did their mathematical modeling many, many years ago, and the one that I'm talking about specifically is Renaissance. Renaissance Technologies, and I think they call it the Medallion Fund. It's the number one fund of all time. Number one fund of all time, and it's a guy named Jim Simons. They use scientists, they use physicists, they used astronomers, they used like all these brilliant people to do all this modeling. And what they came up with was it is much more likely to make larger amounts of money, which goes against conventional wisdom. And most hedge funds, right, and most institutions still do it the other way, even though they don't perform like Renaissance and the other one. I can't remember the name of the other one right off the top of my head, but it's 2 of the top 3 hedge funds in the world, and they consistently not only outperform, but significantly outperform everybody else. And they both trade, like 95% of their trades are scalps and day trades. Renaissance, I saw an interview with Jim Simons where I think he said on average they take about 1,500 trades per day. On a low day, they might take 300. On a high day, they might take 3,000. And they're mostly anywhere from a few minutes to no more than an hour or 2 trades. And he said very rarely do they take a trade that lasts more than a day, because the probabilities start to go down that you're going to be successful. So they just keep taking these smaller, in comparison, right? These smaller trades that are higher probability of success. They just take them over and over and over and over and over and over again. And that's why their returns are phenomenal. Over 30 years, they've returned 39% per year. That's like unheard of. That's why I said it's the number one fund of all time. 39% per year on average. There's been years that they have returned like 70-some% in 1 year. It's just absolutely amazing. Okay, kind of got off topic there. Anything else? I don't see anything else coming in, and we've kind of went over a little bit, but I've had a great time. As soon as this uploads, I'll put the link in the room so you guys can go back and rewatch and take notes. And if there's something that we covered today that was important, you can write it down. And if you guys have any questions, I'll probably, after we get off here, I'll probably take a little break, and then I'll get back in the room this afternoon. But again, as always, thank you so much for joining me, and thank you for being here, and I'll see you in the room here in a little bit. Bye-bye.